Bitcoin just had this monthly cross on the stochastic RSI. This is a huge deal. Take a look at the other times this happened. Way back in 2013, cross down, more than a 70% drop. Fast forward, 2017, we had a cross down, more than a 70% drop. How about 2019? We had a cross down, 70% drop. How about 21? Cross down, 70% drop. We've had 4 other such crosses. All of them resulted in a 70% drop. Is Bitcoin about to have a 70% drop? Or is there a curveball coming your way? Welcome in, everybody. If you're new, my name is Steve. On this channel, I do not tell you what you want to hear. I tell you the facts in the charts, and I try to help improve your life in an open and honest way with facts in the charts and my own experience. Hit that subscribe button. You're going to love it here. Now, this cross, hot off the press. Hot off the press, just became official. Cross down is in the works. And like we said at the beginning of the show, we've only had 1, 2, 3, 4 others, literally, in Bitcoin's history. Well, we could potentially count this one as the 5th back in 2011. So we've had 5 other ones, and all of them, including this one, represented a 70% drop. So why would this be different? Are we ready to have a 70% drop from where price is at right now? Let's take a look. Let's dive into each and every cross. Back here at 2011, we can call this a cross down, but let's face it, we didn't have enough data and our indicator didn't have enough time to really excel. We did have a cross. This is an official cross, but we don't have enough data to make a sound judgment. Therefore, the first one we can really analyze is this one. You can see that we had a cross down right here back when price was at about 272, and we fell all the way down to 60 something, right? Now, the good news about this cross was that it was short-lived. The bad news is we had this cross down and then we had some pretty big bearish divergence, which was a telltale sign as we went into a market cycle top. As soon as we got here, this is a high, higher high. This was a high, lower high. A huge warning sign, huge bearish divergence, and we saw what happened after that. Now fast forward, next market cycle, we had our bottom. We came back up into the bull run of 2015. This is phase 1 of the bull. Phase 1 of the bull entered up here, and we remained up here. We held some support at that, around that 80 level, which is what you want to see in a traditional textbook bull market without any failures. We didn't have that in 2019. What we had in 2019 is our market cycle top. Case in point, this cross down becomes official once it goes below the 80, according to the maker of this indicator. We had a cross down, we had a huge plummet, and then we had a cross up. Good news, right? Entering phase 1 of the bull here, we could not remain as support on top of here, and because of that, we subsequently fell. We fell by a pretty large price move, about 70%. The good news for 2019 is that we did have a cross up sort of mid-run, kind of in the 40-ish area, 41, 42, 43. We had a cross up around this area here, which told us like, hey, get ready for phase 2 of the bull, which was represented here. And then we had a cross down, which represented the top of the market cycle. Once again, no matter what chart you study, this was the market cycle top. Just like no matter what chart you study, this was the market cycle bottom. This was the top, this was the double top, this was the bottom, this was the double bottom. This one had incredibly strong bearish divergence. This one had incredibly strong bullish divergence. They were the exact opposite of each other. And we were blessed and fortunate enough to make the call of our life with the market cycle bottom here, which in retrospect, if you go back and look at any of the charts, this was undisputably the market cycle bottom. Cannot dispute it now, but this was the double bottom, and here we are today. So just like in 2019, we rallied all the way up and we couldn't remain above. So in 2019, we actually came all the way back down here. However, in 2015, we did dip below momentarily, right? Could this be a little curveball in the making? Because we can start to see a little bit of curvature on this blue line here. Or is it going to be more like 2019? Well, the facts are the facts. We have a cross. It's officially crossed back down through the 80. That's official. However, we did have this cross actually dip below the 80 back here in 2015 as well. So make no mistake, this was a part of phase 2 of the bull, that this was a little fake out just momentarily below. Are we going to look at this a couple months from now and say, this was a fake out just like in 2015? Or are we going to say, man, this is just like 2019. It's going to catch a lot of people off guard, but we're going to have a cross back up, which is going to propel us into phase 2 of the bull. Now, this chart really coincides and tells the story of what we covered last week with our 2 indexes here, right? When this red line crosses back through this green line, we had a rule. We've had it for a year. This says that we're going to add a couple hundred days to our phase 1 recovery. We also talked about the chart with this red line, right? Last week, same story, right? So this cross down in the monthly stochastic RSI is big. It's bigger than the weekly and it's bigger than the 2-week. Last week, we also covered the weekly and we covered the 2-week, right? But the monthly is stronger. And the story comes, the weekly and the 2-week stochastic RSI, are those going to have enough momentum to shift this one around to look like this? That's the storyline. Is it possible that the weekly stochastic RSI and the 2-week could have momentum to turn this? Absolutely. It's a possibility. If you're going to sit here and say it's not a possibility, you're not being honest with yourself. Another thing that we can say is you see this area of resistance that 2019 had right at about 92. Why is that important? That's the exact area we saw resistance right now. And it's not just on this chart. It's on another chart, which we'll get into in a future video, which is right here on the total market cap. But for now, we'll stay tuned right here. So 2019, we're acting a little bit similar, right? This sort of resistance zone was this support zone from here. So you can see the support zone from here for the stochastic RSI. It was resistance here, and it's been our resistance current day. Incredibly noteworthy because this did not have that same resistance zone. This was above. This got rejected. So far, this got rejected. This did not, and this did not. Both of the did nots were above our resistance zone. Both of the dids were below the resistance zone. Those things are just facts. What I've said now is just a fact. This is not my opinion. It's not my emotional opinion. So we've always said, and weeks ago we said, look, if you're a short-term trader, you would have taken action on that weekly stochastic RSI cross-up, but you would have had these concerns. If you're a medium-term trader, you would have looked at the pi cycle, the red line, we dropped below that, and you would have looked at our 2 indexes that we've said here, and you would know that it's inevitable that we're going to have a couple hundred more days of recovery in this phase 1. It'll still be phase 1. It'll be a little bit of a rocky road in phase 1, but it'll still be phase 1. So which one is more probable right now? It's definitely a possibility that we could reverse here. It's going to take some muscle from our short-term momentum to try to help propel this. However, it's looking more likely that we could have a potential retest of our base. And again, that would throw a lot of people off because once we had a retest of our base, they're going to scream for it to go way lower, and it never will. They're going to scream for us to make a new low, and it's really not likely we're going to make a new low. They're going to scream that it's going to go to 10K, and it's really not likely we go to 10K. They're going to scream lower prices. It's not likely. What's likely is a potential retest of our base to shake things out, and then we continue. We're in phase 1 of the bull. It's highly unlikely that we're going to go out of phase 1 of the bull, right? There is a small potential that we move into phase 2 of the bull, but once again, it's a small potential. So as the charts stand right now, these are the facts that we have in front of us. We have to be open and honest with them. But again, the name of the game here is not to be a swing trader. You're going to miss out on all these moves, right? The name of the game is to look at these big moves, to stay level-headed, to make sound investments. If you're a long-term investor, you would have invested near the market cycle bottom or the second bottom. That's where you would have been saving up money. If you follow my strategies, right? I made a 5-day masterclass precisely about this, exactly what to do into the bear market and what to do in every single bear market going forward. I gave you an exact strategy, step by step, right? If you somehow slept through all of that and you're a long-term investor, you want to invest in phase 1 of the bull, which is now. at any point in phase one of the bull. You can dollar cost average every week. You will look like a superhero years from now, okay? What you don't want to do is, if you're a long-term investor, you don't want to start investing in phase two of the bull. You don't want to. You want to be finished with your investments with phase one, okay? So again, it really depends on what time frame you look at, but we've been saying the same thing for months and months and months and months. The worst case scenario is we retest our base. The best case scenario for this year has always been 48K, which Bitcoin could make a curveball and somehow get up towards that level. That's definitely in the cards as well, right? We have to be honest and open. But if you're a long-term investor, you don't care if we crash way down to retest our base, and you don't care if we go up to 48K. Long-term investor, your strategy stays the same regardless of what we do. So if you're like me, I don't care if we go up, down, backwards, forwards. It doesn't make any difference in my strategy. I'm already locked in to make crazy profits just following simple strategies. My job is to try to help you realize you're over trading, you're trading on too small of time frames, and you're missing out on all these huge moves, and you have way too much stress. All of these things can help you tremendously. Hit that subscribe button. I'll see you right back here in the next video. Do you want to know when to buy and when to sell? Click this video right now.